Hello everyone, welcome back to my channel. So yesterday I saw the news that Brooks Brothers, which is 200 years old retail stores, had filed bankruptcy. In the meanwhile, the confirmed cases in the United States has passed 3 million. While the economy is hit hard and people's life is at risk, the stock market seems not stop going up. Some of the tech companies even reached the new highs like Apple and Amazon. Well, that may probably has a lot of external factors, while Fed has released the liquidity and QE policy and also the zero interest rate, which made a lot of assets has nowhere to go but the stock market. While we saw those tech stocks are too high to buy, I'm looking for some potential stock which are tumbling hit by this pandemic but will recover and performs better in the post-pandemic period. And one of my findings is Dunkin brand's ticker symbol DNKN. So recently, because we cannot go out to buy a coffee or it's more dangerous, I just choose to make coffee at home, so I bought the Dunkin. And like a lot of people, I start my day with a cup of coffee just to wake up and make my brain start to work. So I think Dunkin brand has been one of the competitors of Starbucks because they are increasing focus on the coffee products and their own special coffee drinks, which has created a difference from Starbucks drinks. They have 20,000 points of distribution in nearly 60 countries, and the company believes that its portfolio has strong brand awareness in the company's key markets. So recently I saw the news that Dunkin has closed some of the stores in the Speedways, which is located in a gas station. They also hire more employees, around 25,000 more. So through this pandemic, the company are adjusting their strategies and they are looking to adjust their pricing and their product mix to increase their profit margin. In my observation is that Dunkin is pretty popular in the East Coast at least. I heard that Starbucks is more popular in the West Coast. The two cities I have lived, like New York or Boston, there's a lot of Dunkin stores. Always saw people on the street holding a cup of Dunkin's drink. I couldn't tell the difference of coffee taste between Starbucks and Dunkin, so I just go to the closest store, or if they have some special drinks, I would look forward to give a try. So as for the revenue source, there's mainly 4 types. The first one is franchisee fee and royalty income. As we know that Dunkin is 100% franchise model, so the business are operate with less capital. So the first revenue source is franchisee fee and royalty income, which accounts for 44% of their total revenue. And it has 4% yearly growth. The second largest revenue source is advertising fee and related income, accounts 36%. And also rental incomes, which accounts for 16% of the revenue. And the last one is their ice cream business, which is only 7%. As we can see, their revenue source including franchisee fee and rental income, so we may know that their business model is similar to McDonald's. Well, they provide the space and they charge for the franchisee fee, and Dunkin' Donuts is 100% franchisee when compared with McDonald's, which is just around 90%. So this allows Dunkin' to operate with light capital and to have less fixed costs and more stable cash flow. And I think the second reason is compared with Starbucks, Dunkin' has a lower price. For example, in their mobile app, they will have some promotion like Dunkin' Run. They offers $2 coffee in a limited time, which would become bigger in the post-pandemic situation. When consumers are smarter, they want to spend money in the most necessity areas, and they will choose the ones with a better value. And in my observation that the large cup of Starbucks is like this big, and the large cup of Dunkin', which is way much bigger. In a lot of consumers' eyes, including me, more products means save money in this area so that it can be sustainable. Starbucks do have one of the risks is what Starbucks selling is the third place space, while in this situation people don't want to go to the third place. They just want to try to avoid go to other places that may contain virus. So in this way that the premium Starbucks charging seems doesn't pay back to the consumers. So that's why I think Dunkin has a better win. Although Dunkin sales has been hit in this pandemic, when people go back to work, they will probably go back to their morning traffic to the breakfast store like Dunkin or Starbucks. So at that time, the sales will gradually pick up. A lot of stores enable drive-through that would also help their business to go back to normal. So last but not least, I think the third advantage of Dunkin over Starbucks is currently the store in United States is only over 10,000, which is much less than Starbucks, and Dunkin is just concentrated in the northeast area like New York and Boston. So if they are expanding further across the United States, like in the west coast, in the south part, or in the middle part, there's still a lot of space to grow. So I think in terms of picking the stocks, it's like to buying a dream, or it's like buying the imagination, like how much it can grow rather than like how big it already are. So in that sense, I think Dunkin's growth space are bigger than Starbucks. Yeah, so that's some of the thoughts I have on Dunkin stock today. I saw its current PE is 22, which is cheaper than Starbucks PE, which is 26. And I think the current price 65 maybe is within the range that is good to buy. Considering in the current stock market, a lot of stocks has hit its 52 weeks high. Dunkin stock price is much lower than 52 weeks high, which is $84. So yeah, that's just my personal thoughts. That's all for today. Thank you guys for watching, and I will see you guys very soon. Bye.